Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index remained near the 98 level late last week, hovering around its lowest point since early October, as markets continue to price in further Federal Reserve rate cuts next year. Strong GDP data released on Tuesday did little to shift rate expectations, with investors still anticipating 2 cuts in 2026. Rising geopolitical tensions boosted safe haven demand for precious metals, adding pressure to the dollar. Oil markets traded in thin holiday conditions last week, with WTI crude settling slightly higher, near $56.8, up just over 0.5% on the week. Despite short-term geopolitical support, the broader market remains dominated by oversupply concerns. The International Energy Agency expects global supply to exceed demand by nearly 3.8 million barrels per day in 2026. Investors are also closely watching potential Russia-Ukraine peace developments, as any easing of sanctions could further lift supply. Gold surged to a fresh record high near $4,550 last week, driven by strong safe haven demand amid escalating geopolitical tensions and expectations of US rate cuts. Ongoing conflicts, energy sanctions, and global security risks continue to underpin investor demand. Markets still expect the Federal Reserve to cut rates twice next year as inflation cools and labor conditions soften. Gold is up more than 70% year to date, marking its strongest annual gain since 1979. Dollar yen traded with heightened volatility last week, initially consolidating before pushing above the 156 level and briefly testing 156.4. While the Federal Reserve's relatively hawkish tone supported the dollar, expectations for a possible Bank of Japan rate hike in early 2025 continued to underpin the yen. Governor Ueda reiterated that further tightening remains possible if inflation persists. Despite this, the yen remains near multi-month lows, keeping the risk of official intervention firmly on the radar. Eurodollar traded quietly within a narrow 1.17 to 1.18 range last week, reflecting typical Christmas holiday conditions. The European Central Bank kept rates unchanged for a 6th consecutive meeting, maintaining a cautious but stable policy stance. In contrast, uncertainty continues to surround the Federal Reserve's longer-term path, with internal divisions narrowing expectations for 2026 rate cuts. ECB's outlook remains modestly optimistic, with Eurozone inflation projected near target by 2026.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.